Housing affordability in the United States sinks to the lowest point since 2007. And as bad as that sounds, it's actually a lot more complicated than that. But before we look into the complexity and talk about why that is, let's take a look at the details. The costs of a typical home, including mortgage payments, property insurance, and taxes, consumed 35% of the average wage in the second quarter, the highest share since 2007, and up from 32.1% a year earlier, according to a new report from Attom. Growth in expenses, along with mortgage rates hovering around 7%, have outpaced income gains as a persistent shortage of listings pushed the median home price to a record high $360,000, Attom said. In more than a third of U.S. markets, ownership costs ate up to 43% of average local wages, far above the 28% considered to be a guideline for affordability. So the percentage of your income that the average person has to pay in order to reasonably be able to afford the median house has gone up to basically the highest it's ever been. And the CEO of the company Attom that made this report says this interesting thing about it. The latest affordability data presents a clear challenge for home buyers. While home prices are increasing and mortgage rates remain relatively high, these factors are making homes less and less affordable, and said Robert Barber, CEO for Attom. It's common for these trends to intensify during the spring buying season when buyer demand increases. However, the trends this year are particularly challenging for house hunters, more so than at any point since the housing market boom began in 2012. As the 2024 buying season progresses into the summer, we will continue to monitor the data closely. The patterns during the months running from April through June came as the national median home price rose 7.3% quarterly and 4.7% annually, further hampering buyers during the second quarter, where the 30-year home mortgage rates that ended that quarter at about 6.9%, or more than double where they stood in 2021. Those factors helped boost home ownership expenses by about 10% in the second quarter of 2024, after declining slightly in the prior two quarters. So the actual costs of homes themselves are going up, and so are the expenses associated with owning a home. For example, replacing hot water heaters, getting your roof redone, replacing your windows, or getting your HVAC fixed, etc., etc. And this is obviously a bad thing. Houses cost more, repairing things in houses or upgrading things in houses costs more, which is obviously not great for a lot of people, but this is leading to a very interesting issue that might catch you off guard. U.S. new home sales slump, supply at more than 16-year high. And this is interesting because housing cost is basically at the highest it has ever been. But supply is also the highest it's been in recent memory, or at least in the last 16 years. Usually when supply goes up, then the price goes down because there are more options available for people to switch to if one of the options they want is too expensive. And that's why when you have supply go down, price goes up, because people have fewer options, so they're forced to buy whatever they have available. However, right now what appears to be happening is supply is going up, but also the price continues to go up at the same time. And this is a pretty unusual economic phenomenon to be having right now. And Reuters talks pretty well about this in this paragraph. As it stands, today's report will be further evidence to the Fed that monetary policy is restrictive, and it will be time to start lowering rates in the coming months, says Richard Somebody, macro analyst at William Blair. And this today's report is referring to the amount of U.S. homes there are available, basically saying there's so many homes available that aren't selling because people aren't able to afford them that the Fed will simply have to drop interest rates from the 7 or whatever percent it is now down to a lower point so that people are able to purchase more expensive houses with lower mortgage rates so that their dollars go farther. But it continues. New home sales declined 11.3% to a seasonally adjusted annual rate of 619,000 units last month, the lowest level since November, the Commerce Department Census Bureau said. The percentage-based drop was the biggest since September of 2022. The sales pace for April was revised up to 698,000 units, a 9-month high from previously reported 634,000 units. Economists polled by Reuters had forecasted new home sales, which account for for 13.1% of US home sales would hit a rate of 640,000 units. Whenever you see that supply is going up, but price is also going up at the same time, there's probably a temptation to say that greedy landlords and greedy house sellers are holding on to inventory and refusing to sell, and that's driving price up. But probably that's not really the case. If we look at some really hot real estate market like Orlando, Florida, I've just put arbitrarily $500,000 as your max price for a home, and we scroll through, we do see that there are people who are selling houses, and a lot of them are cutting prices. As you can see here, the very first one, $9,000 price cut. Then we come down here a little bit. We've got a $25,000 price cut, another $25,000 price cut, $114,000 increase, but I'm sure there's some special things going on there. $10,000 price cut, $19,000 price cut, $19,000 price cut, $10,000 price cut, $25,900 price cut, $16,000 price cut, $21,000 price cut, $21,000 price cut. You get the idea. A lot of these kind of higher end, more expensive houses in the $500,000 range are seeing huge amounts of price cuts. It's probably 1 in 4 or 2 in 4 of these houses have cut their price, presumably because there are so many houses either being built or people are not just interested in moving to Orlando, Florida right now. Now, I'm not a real estate expert, but it seems to me like the houses that are being built aren't being built in places that people actually want to live at prices that people can actually reasonably afford. And interestingly enough, CNBC talked about this. It suddenly looks like there are too many houses for sale. Here's why that is quite not right. And then it goes on to talk a little bit about the supply scenario, yada, yada, yada. But what we're interested in down here at the bottom, on the resale market, the supply is the lowest in the $100,000 to $500,000 price tier, according to the National Association of Realtors. This is where the bulk of today's buyers are. Higher mortgage rates have sent them seeking cheaper homes. Interestingly enough, however, while supply is increasing across all price tiers, it is increasing most in the same lower end price tier, meaning that it is simply not enough. As fast as homes are coming onto the market, they are going under contract. For example, there's just a 2.7 month supply of homes for sale between $100,000 and $250,000, but supply is up 19% from a year ago. Meanwhile, there's a 4.2% supply of homes priced upward of $1 million, but supply is up just 5% from a year ago. This explains why home prices remain stubbornly high, even with improving supply. Prices in May, the latest reading, were 4.9% higher than May of 2023, according to CoreLogic. The gains have begun to shrink slightly, but not everywhere. So it's not that houses aren't being built, it's that affordable houses in the $100,000 to $250,000 range aren't being built. Let's run some numbers here. The median household income in the United States right now is $74,890 or something like that, but we'll round up to $75,000. Let's plug that into a how much house can I afford calculator, just the default one that's on Google. So if we do $75,000 and we're going to say we're super responsible and have no debts and a down payment of, let's say $25,000. The most I can afford is $273,300 in house, assuming I am in the state of Kentucky. With the median house price being $360,000, that means the median person is just under $100,000 away from being able to afford the median house price. And that is the real issue. Houses are being built. Absolutely they are. New construction is doing quite well. However, they're not being built in this $100,000 to $300,000 range. Most people are building houses over that $300,000 or $500,000 amount. The median household, maybe if they stretch their budget, could do as much as $300,000 in house. But by and large, they're just simply not being able to afford that. Also, before we move on and talk about the final points, I put out videos 2 to 3 times a week, and I'd love a subscribe if you enjoy this kind of business news and finance deep dive. So this whole scenario begs the question of why. What's causing houses to be built that are so expensive that the median person is unable to purchase them? If there's such a high demand for starter homes under that $250,000 mark, why aren't those being built? And there's 2 main reasons. The first is local regulations and zoning laws. Most of America, something like 75%, is zoned for single-family homes. That means you can't have duplexes or triplexes or townhomes or any other means of multifamily home ownership. And that pretty much automatically will drive up real estate prices. Imagine you had 10 houses built. Well, that's 10 families or 10 people that could move in. Whereas if you had 10 duplexes built, that's 20 people or 20 families, or 10 triplexes, that's 30 people or 30 families, you see that you get 2 or 3 times the amount of people building duplexes or triplexes as you do single family homes. It's pretty easy math. But if people are just not allowed to build those kinds of homes, then inventory is kept artificially low and the price is kept artificially high. Legally, if you build a 2,000 square foot structure for housing, it can only be for a single family home. It cannot be for 2 people or 3 people or multiple people in some kind of a townhome situation. And additionally, you also have to get a bunch of permits. You have to get building permits, zoning permits, environmental permits, electrical, plumbing, and HVAC permits, and so on. And by the time you've bought the land and gone through the arduous process and bureaucratic red tape of getting a bunch of permits, you're, let's say, as much as $100,000 in the hole. And construction hasn't even started yet. If you want a $200,000 house built, then your budget is half gone at the point of buying the land and getting the permits. How on earth are you going to be able to build an entire house for $100,000? You've got materials and labor and delays and all sorts of things and inspections and architectural consultations and all the things that come with building a house. There's no way you can reasonably create a house at under that $250,000 mark. And what's even worse is that a lot of places won't even allow for small houses to be built, even if people were able to and able to turn a profit off of building them cheaply. And that's because it'll bring down the value of the other houses in the area. If your house is worth $500,000 because all the other houses on the street are worth $500,000, and then a small development is set up nearby where all the houses are $250,000, your home prices go down. And so local laws and NIMBY laws are essentially created to protect the home value of the residents that live there. And as a result of that, prices are kept artificially high. The second big reason is that just straight up more money is made on bigger houses. If I have fixed costs of say $50,000, totally random hypothetical number, but a fixed cost of $50,000 for all the permits I need to get, all the consultations I need to get, all the city inspections I need to get, so on and so forth, then the more expensive I make the house, the more money I make off of that. If I have $50,000 in fixed costs for all the aforementioned reasons, and then I build a house for $150,000, okay, that's $200,000. I could sell it for $250,000 and make $50,000, or I could just build the house to be $300,000 and sell it for $400,000. Well, then I've got way more of a profit because my fixed costs are so high that I need the house to be even more expensive in order to recoup them. More expensive houses are essentially actively encouraged because of how expensive and difficult it is to build houses or add on to houses that already exist. If we want cheaper houses, then we have to reevaluate the regulations and restrictions we have that are preventing people from actually building those cheaper houses. And I'm not saying we get rid of them completely, that's absurd and stupid, but I am saying that we need to look at them and see if it really is important to have as many restrictions and as much red tape as we do, preventing people from being able to build and sell these cheaper houses. But honestly, if history is anything to go off of, our elected officials are not going to be able to do anything like this, and the housing crisis will continue to get worse. Thanks for watching.